Good morning, Mark Soderberg with ADM Investor Services with your morning ag market outlook. Nearly all green on the agricultural screen here this morning as prices have firmed in overnight trade. Corn and wheat are both 1 to 2 better. Corn actually backing off here a little bit now, near unchanged here on the December contract. Soybean prices 4 to 5 higher, a little bit lower in the meal, while bean oil prices, they have bounced about 60 to 70 points, largely in step with a surge in energy prices. Spot crude oil is up nearly $3 a barrel this morning following news late yesterday. The Trump administration has announced new sanctions on Russia's two largest oil companies, Lukoil and Rosneft. These two companies alone combined to produce over 5 million barrels of oil per day. President Trump's patience with Russia appears to be running thin as they look to up the pressure on Vladimir Putin in hopes of finding a peace deal with Ukraine. Key to the success of these latest sanctions, or whether they are able to deter countries like China and India from buying Russian oil, which has been a key to funding their war efforts. The war in Ukraine will likely be a major topic of discussion between President Trump and Chinese leader Yi when they meet next week in South Korea. Trump has indicated that he feels Yi would like to see peace in Ukraine and remains confident that a trade deal beneficial to both U.S. and China can be reached. Trump has called on China to resume buying U.S. soybeans while they have still not booked any here for the 2025-26 marketing year. It's estimated China still needs nearly 10 million metric tons of soybeans, or roughly 350 million bushels in this December-January timeframe. U.S. Trade Representative Greer and U.S. Treasury Secretary Bessent are off to Malaysia, where they are to meet with Chinese trade officials this weekend ahead of Trump and Yi's summit next week. Weather-wise, mostly dry over the next 5 to 7 days across west, central, and northern growing areas of Brazil. Should enable soybean plantings to advance rather quickly. It will be late next week before the next chances for widespread moisture, something that it will be much needed with the slow arrival of the monsoonal season. In the U.S., rains will start to fill in across the southern plains. The remainder of the week gradually shifting into the Delta and Gulf Coast lighter amounts for the central and northern Midwest should allow harvest operations to resume without much delay. December corn did trade to its highest level in a month. Next resistance is a September high at 431.25. Spreads are starting to back off a little bit, perhaps on a little bit of a pickup in farmers selling in response to the higher prices and as U.S. storage tightens up a little bit. No export sales again today with the federal government still closed. November beans reached a 6-week high overnight. Next resistance there is the September high at 1053. Inside trade for bean meal overnight. Recent weakness there has allowed its product value to dip to a 5-month low at 46.3% before the overnight recovery. Beef meal also pulled back after reaching a fresh 2-month high in early strength. And in wheat, just kind of a follower still, Algeria's recent purchase of milling wheat is believed to be much larger than the 50,000 metric ton tender. Volume estimates range between 500,000 and 600,000 metric tons, with the purchase price right around or just under $259 per ton on a SIF basis, with much of that wheat likely to be sourced from the Black Sea region. Thank you for listening, everyone. I hope you have a wonderful day.